What's up everybody, Jaspreet Singh here, and JP Morgan, the largest bank in America, released their earnings statement today, and in that earnings statement, not only did they show a larger than expected loss in their profits, but they issued another recession warning. So Jamie Dimon, who is the CEO of JP Morgan Chase Bank, he came out and he said that the company saw their profits drop by 28% this quarter, which is more than what they expected. But the more interesting thing is this talk of negative consequences. So it's not the first time that Jamie Dimon has talked about the risks of a recession. I made a little timeline. On April 4th of this year, Jamie Dimon came out and he said that our economy faces unprecedented risks because of everything going on in the world and the economy. Then on June 1st, he came out again and he said, brace yourself for, quote, an economic hurricane ahead. Then today, on July 14th, Jamie Dimon came out again, and what he said is, with everything going on, from the geopolitical tension, to the high inflation, to the rate hikes, to the war going on, this will lead to, quote, negative consequences in the global economy. And that is what JP Morgan Chase Bank is preparing for. They're preparing for whatever these negative consequences are. And the reason why this is important is because there are things that you can learn from and replicate from what JP Morgan Chase Bank is doing. So what they're doing right now is, first, they're cutting their spending. They announced that they're not going to be doing any more share buybacks in the near future. They've completely turned that off because they want to save money and they want to cut their spending because they've been building up this massive cash pile. What they did over the last quarter is they put aside $428 million in cash. Why did they do that? Well, what he said is this cash, these hundreds of millions of dollars that they're putting aside, is to help them take advantage of whatever these negative consequences are. So on one hand, they're putting aside cash to protect them from, a slowdown. So if they start making less money, if they don't start making a profit, they have cash to protect them, but also to take advantage of opportunities, which is kind of what we've been talking about, where we say how more millionaires are made during recessions and crashes than any other time. Well, JP Morgan Chase Bank is literally trying to use this negative consequences, this economic hurricane, the slowdown, as an opportunity to become one of the most largest entities in the world. They're putting out cash, they're saving cash, that way they can take advantage of buying distressed assets. Now, interestingly, right after JP Morgan made that statement with this negative consequences about the recession, Bank of America also came out and talked about a recession. They said that we should prepare for a recession. However, they didn't say it the way the JP Morgan Chase Bank did. They're saying that you need to prepare for a, quote, mild recession. They're saying it's not going to be that bad. And according to them, the reason why they're saying this is because they're saying that you can expect the S&P 500, which is a group index of the largest 500 companies on the stock market, they expect the S&P 500 to fall by 25% off of its highs, which means we're almost at the bottom, according to JP Morgan Chase Bank, because the S&P 500 fell, it's probably about 20% or so off of its highs, and they're saying it's only going to fall 25% off of its highs. And the interesting thing about that is, on average, when you have a recession, the S&P 500 falls by 31%. That is kind of the average if you look at the last number of recessions that we've had, and that kind of factors in your mild recessions and your severe recessions. But on average, 31%. This is why Bank of America is saying it's going to be mild, because they don't expect the S&P 500 to be hit that hard. Now, there's a couple of reasons as to why. Either they think that the recession isn't going to be that bad, that our economy is going to recover quickly and that inflation is going to come down quickly, or they think and are factoring in that the Fed is going to switch their stance and they're going to start stimulating and they're going to start inflating our economy quicker. That means that it's going to help pump money into markets to cause the economy to boom, which doesn't solve the problem, but it kicks the can down the road for the future. So kind of an interesting dynamic between JP Morgan and Bank of America. And this brings me to what's going on in cryptocurrency, because Celsius just declared bankruptcy. Now, we are talking about this in Market Briefs. If you have not joined Market Briefs, my free financial newsletter, where every day, Monday through Friday and Sunday, my team is breaking down what's happening in the stock market, the real estate market, the crypto market, inflation, and the global economy, you have to join Market Briefs. It is a super fun newsletter. We have an amazing community there. It is witty, it's easy to read. I mean, even if you don't have a finance degree or any exposure to finance, it is so easy to read. That's why we created it, so everybody can understand what's going on in the financial markets. And the best part, it's free. So if you have not joined Market Briefs yet, make sure you do that. I'll put the link for you. You already know where it is, down in the description below. But now if we go back to Celsius, Celsius emailed, this is late last night actually, on Wednesday, July 13th, to send out an email to all their users. And the first 2 sentences of the email was, moments ago, we announced that Celsius voluntarily filed petitions for Chapter 11 reorganization, aka filed for bankruptcy. You will be able to find the official announcement here. Kind of interesting and not really surprising. So a while ago, Celsius was probably one of the first major cryptocurrency brokerages, exchanges, to freeze withdrawals, meaning if you had money in Celsius, you were not able to pull it out. The reason why was because they were having liquidity issues. Now, interestingly, I told you that they were having liquidity issues. I talked about that, but they kept saying that they're not facing liquidity issues, that they're doing just fine, that it's just temporary. Well, now they made it public and they said, yes, they don't have money to fund all the withdrawals. And so now they have filed for bankruptcy, which means if you have any cryptocurrency in Celsius, well, chances are you're not going to get all of it back or any of it back. And this is why it is so important that if you are investing in cryptocurrency, that you do not keep any of your cryptocurrency in an exchange. An exchange should be used as an exchange, meaning as a place to exchange cryptocurrency or purchase cryptocurrency, but do not keep your crypto there, because if you keep your crypto on the platform, well, now it's in the hands of the exchange and it could be gone, because if the exchange goes under, well, then there goes your crypto as well. So you need to have a wallet. The best thing that you can do is have a cold wallet. This is a USB drive. I use a Nano Ledger. I'm not sponsored by them. That's just who I use. It is a little USB wallet. So you take your cryptocurrency off of the internet and it's on a USB drive. Now, if you don't want to have a USB drive, at the very least, have a hot wallet. A hot wallet is a wallet on the internet where now you're taking your crypto off the exchange and into a wallet. That way it is separate from the exchange. That way, if an exchange goes bankrupt, you are still okay. So, I expect a lot more volatility with crypto, because as interest rates go up now, because now the Fed is probably going to have to be even more aggressive with interest rates to fight off the new inflation report that we got. If the Fed keeps doing that, that's going to hurt crypto prices more, because crypto is speculative and all speculative assets get hurt the most when you raise interest rates. And so when crypto prices go down, that hurts the exchanges, and many of these exchanges are not well-run companies, unfortunately. So you can expect more exchanges to get hurt, and as more exchanges get hurt, that hurts the price of crypto even more, so it kind of creates this negative spiral. Now, if you believe in crypto, that can create a buying opportunity for you, but you have to be a long-term investor and you have to understand the risks. This brings me now to the jobless report that just came out today. It's been a crazy 24 hours worth of news, which is why I'm making this second video today. The whole team upstairs, we're doing a whole bunch of other things, but with all this craziness going on, I wanted to make the second video just because of everything going on. I mean, it's just been nuts. So that's kind of my little rant on that. But the jobless claim just came out, and it said that today, the weekly jobless claim just hit an 8-month high. What does that mean? Well, for the last number of weeks now, we've been seeing jobless claims kind of slowly inching upwards. And the reason why this is important is because, well, the Federal Reserve Bank has been able to raise interest rates because they keep saying our fight on inflation is important and our economy is strong. Now, when you talk about the economy being strong, what are you looking at? You're looking at things like unemployment. And up until, still now, unemployment is still very low, meaning, based off of the numbers that they have, right? They can be kind of manipulated, but based off of the numbers that are reported, most people are working. So that's a good sign. which means that the Federal Reserve Bank has more power to raise interest rates and fight inflation. However, we're starting to see this change where we're starting to see more and more people start filing for unemployment. Now, the worry is what happens if this keeps going? Because it looks like this unemployment trend is going to keep going, because if the Fed is going to keep raising interest rates, they're probably going to be aggressive with an interest rate hike at the end of July. That's going to slow down the economy even more. That's going to slow down asset prices even more. And the worry on my end is what happens then if we start to see unemployment just start shooting up, because that's very possible. When you start to see these types of economic slowdowns and recessions, you don't see what's going on until it happens. And for most people, most businesses, most economists, everyone's just looking at the data instead of kind of get a feel of everything going on. They're saying, oh, jobless claims are low and unemployment is low and companies are still making good profits, but you're not getting a feel for the fact that consumers are struggling. People are struggling paying for their houses and their cars. Repossessions have been skyrocketing, car repossessions, and that is a major economic indicator. And now we're seeing more and more people struggle to buy a home, which is why home demand has been falling like a rock. And now interest rates are going to go up even more, meaning mortgage rates are going up. I just saw an article actually right now on Yahoo Finance talking about how mortgage rates have shot up today. So that hurts mortgage demand, which hurts the housing market, that hurts the car market. And so if we continue to see the economy start to slow down, and if we continue raising interest rates to fight inflation, something's going to break. Either it's going to be inflation, like inflation is going to just start coming down like a rock, or it's going to be the economy. And this is where, we don't know what the Fed is going to do. Are they going to stay true on their fight to bring down inflation, or is high inflation going to be like the normal here? And that's not good, because high inflation disproportionately hurts the financially uneducated. And this is why, everything that I've been talking about is be prepared, be educated, that way you can take care of yourself. Put cash aside, live below your means. Just look at what JP Morgan is doing. They're putting cash aside, that way they can protect themselves and take advantage of opportunities that come from the negative consequences of everything around us. There are things that we can learn, where now if you have money, if you have cash put aside, then you'll be able to purchase investments at a discount when those opportunities come your way, but that requires you to be prepared. Now, of course, we'll be talking about it on Market Briefs, which is why if you have not subscribed to Market Briefs, make sure you do that. If you enjoyed this video and you want to see the 5 steps to force your way out of poverty, I already made a video covering this, and you can watch that video by clicking this button right over there. Thank you for watching, and as always, keep hustling. If you really want to build true, sustainable wealth, it takes time. And a lot of times we overestimate what we can do in